All right, let's get right into it. Bitcoin is on a total high wire act right now. We're seeing prices brush up against all-time highs, but at the exact same time, there are some serious warning signs flashing. It's an absolutely thrilling moment, but it's also pretty precarious. So today, we're going to break down the two powerful forces that are pulling the price in completely opposite directions. And this really shows you the core conflict perfectly. You've got the bulls on one side, and they are gunning for a new high, maybe around $122,000. But then, on the other side, there's this really specific technical indicator that's trying to pull the price down, all the way to about $117,200. It is a classic tug of war. So which way is it going to break? That is the big question. So let's start with what's happening right this second. Because honestly, the market just feels like it's holding its breath. It's caught between this massive comeback and a potentially painful pullback. I mean, what a difference a weekend makes, right? Just a few days ago, things were feeling pretty shaky. And then, bam, the bulls came roaring back. This sudden charge just completely wrecked anyone who was betting against Bitcoin, the short sellers, and it pumped a huge dose of excitement and optimism back into the market. But here's the thing. Nothing, and I mean nothing, goes up in a straight line forever. This super fast climb has basically built a wall of resistance near the top. A lot of the seasoned traders, they know this. So they're starting to pump the brakes, shifting into a wait-and-see mode before they make their next big move. So, with the market on a knife's edge like this, traders are desperately hunting for clues in the charts. And right now, there's one technical term that's getting all the attention: the CME gap. Okay, so what on earth is a CME gap? It sounds complicated, but it's actually pretty simple. The Chicago Mercantile Exchange, the CME, it trades Bitcoin futures, but it closes for the weekend. Crypto, as you know, trades 24/7. So if Bitcoin's price moves a lot over the weekend, you get this gap between where the CME price closed on Friday and where it opens back up on Sunday. Now, here's where it gets really interesting. Traders have noticed this weird pattern. For months, it seems like Bitcoin's price often gets pulled back down to fill that gap. It acts almost like a magnet. It's become this classic pattern that a lot of people use to predict how the price might move at the start of the week. And this is the magic number that everyone is staring at right now. $117,200. That's the spot. That's where the latest CME gap is. So while the price is trying to push higher, this number is acting like this constant magnetic pull downwards, reminding everyone that a dip to fill the gap is a very real possibility. But Bitcoin's price isn't just decided by chart patterns. It doesn't live in a vacuum. We've got to zoom out and look at the wider economy because there are major events happening this week that could send huge ripples straight into the crypto markets. You're going to want to keep an eye on these three things. This week, we're getting critical new data on inflation. That's the CPI and PPI reports. And why does that matter? Because that information directly influences what the Federal Reserve does with interest rates. And right now, a lot of people are betting they're going to cut rates in September. So, here's the bottom line. If that inflation data comes in lower than everyone expects, that gives the Fed the green light to cut rates. That's generally fantastic for so-called risk assets like Bitcoin, and it could totally spark a new rally. But if inflation comes in hot, well, that could sour the mood really, really quickly and put a stop to the whole party. Okay, so we've looked at the charts, we've looked at the economy. Now let's look at the actual players, because when you see who is buying and who is selling right now, you see two completely different strategies playing out. This part is just fascinating. On one side, you've got the whales. These are the huge investors with tons of Bitcoin. And the data shows they are keeping their cool. They are not selling off their positions, even at these new highs. But then you look at US traders, and they seem pretty nervous. There's a metric called the Coinbase premium, which basically measures US buying pressure, and it's actually turned negative. That suggests demand from the US is pretty weak right now. It's a real battle of confidence. All right, for this last section, let's pull the camera all the way back. Because the daily price ticker, it only tells you one tiny part of the story. The real long-term value of crypto is being shaped by this much bigger and, frankly, much stranger world of human drama, wild innovation, and actual real-world use. So, in the background of all this trading, you have these massive high-stakes legal sagas playing out. I mean, take Do Kwon. He's the guy accused of being the architect behind that $40 billion Terra collapse. He's been fighting extradition for months, denying everything. But now it looks like he might be changing his plea, which would be a huge turning point in one of crypto's most notorious stories. And then you have stories like this, which you can't make up. It shows how incredibly creative this space is. There was this NFT project, Pudgy Penguins, and it was basically on the verge of total collapse. Their solution? They started selling stuffed toys, plushies, and it actually worked. It was a hit, it saved the brand, and it just goes to show that sometimes survival in this world means thinking way, way outside the blockchain. And this brings us to a really powerful final point. While all the traders in developed countries are staring at charts, in many emerging economies, crypto isn't about speculation at all. It's a tool, it's a workaround to bypass slow, expensive, and frankly, broken financial systems. For billions of people, this isn't a game. It's essential infrastructure. And that really leaves us with this final big question. What is it that's truly going to define crypto's future? Is it the short-term drama of traders and price gaps and magnets on a chart? Or is it the long-term, quiet revolution of people building real tools to solve real problems? Where that balance ultimately settles, well, that might just define the future of finance itself. Thanks for watching.